Today, Voyager Digital says FTX's buyout offer is way too low. California lawmakers vote to lift a ban on crypto political donations. And we ask Ari Redboard of TRM Labs what the Coinbase insider trading case could mean for crypto regulation in the U.S. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Digital currency prices are falling yet again to start the week. By noon Eastern, Bitcoin traded around $21,000. Ether was at $1,500, with Solana right around $38. Okay, let's get you caught up on the top stories. First up, FTX is looking to buy bankrupt crypto broker Voyager Digital, and Voyager isn't too happy with the offer. Court documents filed by Voyager called the offer a, quote, lowball bid dressed up as a white knight rescue. The company also said the deal was made to generate publicity. FTX CEO Sam Bankman-Fried has become known as the lender of last resort in the crypto industry, and he saved several businesses with emergency funding during the bear market. Next up, California just overturned its ban on crypto political donations. Lawmakers voted to get rid of a ban on donations to state and local candidates using crypto, but there are some rules. Campaigns have to immediately convert crypto into fiat currency, and they can only use payment processors approved by the Treasury Department. There are strict registration requirements for donors as well. Last up, Yuga Labs is facing a proposed class action lawsuit over its Bored Ape Yacht Club NFTs. The company allegedly promoted huge returns on NFTs to get investors to buy in, according to law firm Scott & Scott. The law firm says those sales helped push the launch of ApeCoin, which then lost nearly 90% of its value. One potential hurdle, though, is that the court would need to determine that Bored Ape NFTs are securities. Okay, for our main story of the day, we're turning our attention to another court case that could determine whether some tokens are securities. Last week, a former Coinbase employee was charged with insider trading. The SEC claims 9 of the 25 tokens involved are securities, meaning they should be treated like traditional stocks. Coinbase, meanwhile, denies that they allow any securities on their platform. So what would it mean if the judge were to rule that these tokens are securities? And what does that mean for future regulation in the U.S.? We talked to Ari Redboard of TRM Labs to find out.
So in this insider trading case against a former Coinbase employee and 2 others, the SEC alleges that 9 of the 25 tokens involved are securities. Can you explain why that's so important to this case?
Sure. And let me back up for 1 second before I sort of really dive into the securities aspect of this, because I think it's really important because there's really 2 separate cases when we're talking about sort of this recent insider trading, sort of Coinbase related. The first involves the Department of Justice. And that the Department of Justice has brought wire fraud criminal charges against 3 individuals. And really what we're talking about here is an individual who worked at Coinbase and had insider information that he shared with co-conspirators and then ultimately profited from that information, essentially buying the coins, knowing that they were going to be listed, or the tokens, knowing that they were going to be listed on Coinbase, and then profiting from that information. It doesn't matter whether they were securities or commodities or currency or really anything else. It was the wire fraud, essentially, the trading on information that they had gotten sort of from that insider information that is really the charge here. Okay, there's then sort of interestingly, there's an entirely separate case that's brought by the SEC, also for insider trading, but really that case hinges on, sort of going back to your question, whether or not the tokens that were traded were securities. It's going to come down to a 1940s Supreme Court decision called SEC versus Howey. And you're going to hear a ton about the Howey test, because what the Howey test basically says is, look, something is a security, or what he calls an investment contract, if there is an investment of money in a common enterprise with a reasonable expectation of profit. And this is the important part, derived from the efforts of others. So ultimately, that's where this is all going to come down to. And I think we'll see in the coming months, there is a lot of importance in ultimately how these different assets are categorized.
On that last point about the Howey test, is the burden of proof here on the SEC to say, yes, these tokens are securities? And if so, how difficult is it to show that they indeed are?
Yeah, so the burden would be on the SEC to, in fact, make their case. It's ultimately going to come down to, and I think this is what's so important, and to sort of say all of these tokens in one broad sweep are securities, they're going to have to go token by token and prove that based on the issuance of that token, the way that token is handled, and ultimately that it is a security. And again, what Howie says, and what's so interesting about this is you go back to, again, a 1946 Supreme Court case that's interpreting a 1933 statute. Okay, and Howie's an interesting case. It involved orange groves, and basically investors bought a stake in orange groves. And the reason those groves or those investment contracts were considered securities is because a third-party promoter ultimately decided the value by their work. These individuals who were investing were not farmers. They were not, cultivating those fields. And here it's really going to be the same question. Are the investors responsible for profits here? Are the promoters responsible for profits here? And is this in fact an investment contract? And it's going to be a challenge to prove, but it's going to be on a case by case, in this case, coin by coin basis, to make that determination. I will say there's sort of one other interesting piece at play here, and that is we're seeing a lot of sort of legislative and regulatory action in the space almost simultaneously. And I think we're going to, over the course of the next, again, it could be months or years, ultimately sort of get some clarity. But until then, quite honestly, we're going to see enforcement action and regulation by the SEC on a case-by-case basis.
Well, that's exactly what I wanted to ask you about, this idea of regulation by enforcement, sort of retroactive rulemaking once things have already taken place. And that's what we've seen a lot with the cases that are being brought by the SEC. You mentioned the Lummis-Gillibrand bill. There was an executive order from President Biden earlier this year. You also mentioned the fact that we're months away, if not longer, from any of these congressional actions taking effect and providing a framework to decide what cryptocurrencies are commodities versus securities. So how much longer do we exist in this space?
I think that the reality is, the Biden administration, I think, was trying to figure out, all right, so is there going to be congressional action? The president's working group came out with a paper on stablecoins. The Fed came out with a paper on central bank digital currencies. And in every one of those, it called for some congressional action. And the executive order really from the Biden administration, I think in many respects came out of the reality that we're not going to see immediate congressional action in the space in the form of legislation. So what it really did was task the executive branch agencies, including the SEC and the CFTC, right, and DOJ, and all these entities that are involved in these types of enforcement actions or criminal cases that we're talking about now, with coming up with a clear, at least regulatory framework, pre-legal policy, framework from the Hill. And I think to answer your question, I wish I had a better answer, is it is going to take time before we see a clear regulatory framework or legal framework coming from Capitol Hill. So I think for some time, we are going to continue to see enforcement actions from Treasury. We're going to continue to see enforcement actions from the SEC. And a lot of that will likely make law. I will say that in a case like this, however, that really makes its way to the courts. This is certainly going to take some time to play itself out, and is going to really some key judicial interpretation around the Howie case and others that are really going to ultimately inform this decision. I will say that you step back for a moment and you realize what's happening right now is very cool, right? I mean, we are building a new financial system, and what we are seeing here is sort of the very early days of regulators and policymakers figuring out how to kind of step in and help build a safer financial system.
Okay, that's all for Crypto World today, but we are back again tomorrow, and we'll see you then.